Hello fellow traders, one more episode of the series. Today we are doing another tutorial episode. You asked me many times to do it. It's the standard deviation. It's an indicator in trading. In this episode, like we do with every indicator, we will analyze it and how you can use it. Of course, every time I'm making an episode of this series, I'm not creating this content just to be generic and so on. For sure, you're going to see some things that you can apply in your strategy or in your technique. Why this indicator is important? Well, I could not say that exactly. Not many people know it. Not many people trader use it because it measures the volatility. However, it can be useful if you know how to trade it correctly, if you know how to read the values correctly, and if you know how this indicator works. For people that are already familiar with math, this will be very easy because many people are asking me how good you need to be in math to proceed in trading. For sure, it will help you analyzing some basic ideas and understand some basic formulas. And this is a very important part when you have to do with some indicators and some technical stuff that you need to be able by yourself to determine and understand how useful is this indicator and how can I use each indicator or an oscillator, or you can choose any definition out of them. So for the standard deviation, as I said, people that are already familiar with math and know exactly how this thing works probably understand how we can use it also in trading. We have the standard definition. We use the Greek letter sigma, the small sigma, to define the standard deviation. How many standard deviations from the mean, from the center line here, represents in a random set of values. Remember that in case of trading, we also need to put some other values inside. And what prices do you expect to see usually in a year? This is especially if you are trading stocks, because we have also earnings and quarter. So this might be more helpful if you want to trade some stocks. Actually, to see how volatile is an asset that you will trade. Again, do not expect miracles. It's just an indicator. So most likely, 95% of the cases of the prices, of the random prices, well, actually, it's not random, but we need to set up some rules. 95% will be between these four standard deviation. And why this is important? This is the formula. How the standard deviation has been calculated in trading. You calculate a simple moving average. Remember how important is again a moving average. Remember that I've told you that it's one of the most important indicators to be able to understand this. Well, the period is 20 by default. In any platform, when you're opening the standard deviation, the period will be 20. Of course, I will open my MT4. I will show you exactly what I mean. You subtract the simple MA value from this. In the past period, you square them. Why you use square? Because we need positive numbers. That's why I told you people that are more familiar with math might find that easier. Of course, this doesn't give you an edge. It will help you more. You don't have to memorize any of that. Why the period is 20? We are using this period. This is by default. And also, for people that are already know how standard deviation works, this will be much easier. You calculate the square root of the result from the step 3. Of course, I will open my MT4 platform because this is the most important part to be able to understand how you can use the prices. Now I have already plotted the indicator, so I will delete it. If you are using the MT4, that's very easy. You use the indicators, trend, standard deviation. By default, what I've told you, the period is 20. However, you need to be more creative. It's also in the close prices. I choose the typical price, to be honest. Open, high, low, close. I prefer because they give a much more fair value, a better representation of the indicator. Of course, you can play with the values and you can understand why. The period is 20. You can use whatever period you want. And why I'm saying that? Let's assume that we go to the daily. And why I'm using the daily, I will explain you now. And that's why I told you every time you need to be creative when you are using an indicator. I will use 365. Actually, it's not 365 because weekends are not included in our trading. I'm just trying to show you and give some explanations on how to use it. Now, we have a year results, let's say, that will help you with your trading. And what I mean by that, the indicator measures the volatility. So we know exactly that the market stays in one point. So we know that it builds momentum. The prices are ready to go in a direction. I mean, either higher or lower. You can use 21. It's a golden ratio number that I would prefer to use. It won't make any difference in your trading. Now, why is that important to understand? Because it measures the volatility. The market builds momentum at this point, and this is obvious. So when you're about to take a trade and you see that there is a standard line that doesn't deviate a lot, which means you don't have high volatility at this point, the market will break for sure. We have analyzed that, we have said that. These are the best points you can choose to enter the market. Of course, you must expect the market to make the move. And this indicator will help you based on the standard deviation, based on the values you are putting. I choose 365 for the entire year. If you are trading stocks, you can do the same. Of course, the bigger the period, the smoother the indicator will be and the bigger the range, the price range. So I don't think it will be very helpful when you want to trade. Of course, when you are at some extremes of a year or 5 years, of 10 years, this might be able to help you in determining your position. If you are going long, of course, if you are going short. For example, if a stock is at all-time lows of the past 5 years, you most likely want to go long. However, you need to determine the market because the prices might keep going lower, and this comes against the rule that we already said. Go with the trend. I mean, 10 out of 10 traders will agree with that. I mean, at least the profitable ones. So in this case, the market starts build momentum at this point. So the prices it's much smoother. The line is much smoother. So the prices breaks above. Of course, the prices will be always positive. That's why we use the squares. So the volatility starts to increase significantly. So at this point, you might be able to consider getting a short position. At the highest point, this is the highest point. So how you want to exit your trade? Well, it's very simple. Of course, it sounds simple because we are analyzing the market after the market done the move, and this is very easy. Of course, this is the reason that I'm always trading live accounts in this channel, because this is a true trading channel, not some random YouTubers that they have no idea what they're talking about. So this is an easy part. Of course, you can use a simple MA, a simple moving average. You can adjust it with the same values. I will put 20 at this case, but it won't make a big difference. So when the prices start breaking above, that might be your exit. Very important to analyze some pros and cons of this indicator. For the pros, for sure it can show you, it's a very powerful indicator. if you want to measure volatility. However, I would strongly recommend, after getting some experience, to analyze more the price action, where the prices stay more or where the prices jumped before and so on. However, for new players, for new traders, for sure, this can be very helpful. The second one, you can combine that with another indicator. For example, you can use some Bollinger Bands. Remember that we have analyzed also that indicator and how you can use it. The standard deviation, some negative aspects. Again, like all the indicators, you might have several false signals. The period by default is 20. However, you can change that at will. Make some logical assumptions that will make sense. For example, what was the volatility, the price of an asset in a period of a week? This makes much more sense instead of just using 20 candles of a period. You need to be creative every time with your trading strategy and your trading technique. Remember, otherwise everyone would make a profit in the market. However, the numbers are exactly the opposite. 90% are losing money. I have told you that many times. So do not expect to beat the market so easy. It won't be easy, I can guarantee. And of course, for people that are new in trading, the information are too many. So many indicators, oscillators. You will see people analyzing the market when the market already did the move. However, can they show you a profitable account? They know how to trade. Do they have some proven trading history? This is a huge chapter in trading, and you have to eliminate on how it can be done, because it can be done. Trading can be profitable. Of course, it's not so exciting as you might expect it to be, because you are waiting to enter the proper time. Again, this indicator is having a lot of flaws. Again, I strongly disagree with the period of 20. You can use a FIBO number, you can use 21. It won't change the value so much or the graphs, because you know exactly what is behind, you know the math. Apply to the close. I usually prefer high-low close. It's a better way, a more fair way, let's say, to present our data. This is what I prefer. Now, again, many false signals is you can use the combination with a Bollinger Band or some envelopes. That might help you. Remember, don't keep your diagrams clean. Don't plot any indicator that you will find in front of you. Keep indicators simple. Use them as signals. The market leave clues every time. Repeat yourself, however, not with the same way. We have analyzed that. It's very hard to beat the market. You need to have some realistic expectations. You might never do it. Even trying, even getting it to a point that you try that, can be very rewarding, I can guarantee. If you want to make profits, it won't be easy. It won't be easy at all. I mean, the number are against you because 90% are losing money. So this, in the long term, means that not everyone can beat the market, and I can guarantee you need to have much experience in trading, because you are asking me if a year it's enough. I have some traders that they are very promising in the couple months. I mean, they are trading like 8 or 9 months. They are doing that consistently. Of course, they have huge time, free time to do that, because trading will consume a lot of time, especially making some tests. You can exclude right away people and some videos that are showing some winning profitable strategy from 1,000 to 1 million and so forth and so on. You can exclude them right away. You are looking at the wrong direction. Of course, you can make your own tests. you can follow this video. That's why I'm also making the Forex debunk, because I have many interesting strategies and ideas from traders that are sending me their techniques. Of course, I cannot see all of them for sure, especially comments that I see in my FX book. This is much older, of course. We are talking about accounts that I have more than 9-10 years, even more. Again, thank you very much. Thank you for watching my videos. Thank you for subscribing to my channel. Remember, this is one of the few true trading channels that you will see. And of course, it's very important to check the trades, because we are always getting live trades. And this is the reason that we created this channel. Thank you very much. Thank you for your support. Trade safe. Then I hope I'll see you in the future.